Welcome back. Now obviously my screen looks a little bit different here, where we have two time frames next to each other. We have the daily, as we can see by this, which is every single candle is 1 day, and then we also have the weekly. Every single candle is 1 week. Just wanted to show you how the time frames interact with each other and how people typically do their multi-time frame analysis. But before that, I do want to touch on order blocks. It's going to be a brief explanation of it. There are some other nuances, but we'll just stick with the one that I'm going to give here. So order blocks is in an up move. In an up move, it is to last, or a down candle in an up move. So in this up move here, we have this down candle. This would be an order block. Right, order blocks really is just used for a point where the higher low could target, right? So it's a point where the higher low, when price starts moving down, whereas possibly will turn that to continue going up. Right, so we have, just say I'll mark them here. Don't. Alright, just use this. Alright, so that would be an order block. This would be considered an order block. And this would be also considered an order block for the up move. But once we break it, right, then these would be considered, would be the up candles and the down move. So this would be an order block. These two, I'll just mark those together, order block. This one here will be an order block as well. As we can see, price went up, it went into the order block, and then it created the higher high. So it's where the higher low is marked. Same thing here, we broke this one here, so then we start knowing that we're bearish, so we're expecting prices to go lower. Then once we get here, we have our trend line break. The question is, where will price trade into to make another lower low? And we had our order block here, order block here, order block here, so I would have expected it to be one of those three areas. But we hit the first area, and then we turned and went back down, boom. Then price made another low low here, we would have had an order block here. Right, price went above it, and then it continued, but it did give a reaction there. Obviously, it won't respect every single one. You will have sometimes you go through it, but just a good reference point for where price could possibly turn at. Then we see it on a weekly as well. Same thing. Just mark up some more order blocks. So in an up move, it's the last down candle, or some people would say it's the last candle before the up move started. So you know we had this break of this level here, boom. So once we get that break, we're gonna be like, okay, where's the order blocks? We see this candle, but it's just so high up in the move. Probably wouldn't mark that one, but then we get this one down here. And you can see price went down and respected it. Then we get another move up, boom. Then we have order block here. We also have another order block there. Price didn't respect them, it just traded down. So it broke this level though, so that means now we're expecting down move. So now the order block is the last up candle. Here, price went up, and then it started going down. But then it went up again, and if we just drag this over, you can see it still respected it before it went down, which is interesting to look at. And then obviously also, you see I have the order block here. Well, this level marked out, you can see that same level here. I will just change the colors of that. Alright, I'm just gonna change this so it's somewhat different. Alright, so we can just keep that. Alright, but also within these smaller movements, we can have order blocks within there too. So like, we're on a weekly still. We have this movement here, we went down, so this was the original one. I just want to change this back to the daily templates. And then we also had this order block. Price went down. Then we have this order block. Don't really like that one, but we'll just mark it. But the actual one was here. Boom. So those are order blocks. So it just gives you a area to, in your trading, to say, okay, price is likely to come back to this area before it starts to go down. So let's just get rid of some of these ones that did not get hit and keep the ones that actually got hit on our charts, or got validated, I guess it would be. Actually, let's change this to full supply. Alright, and then I guess the other thing we probably should touch on is liquidity, right? So liquidity is just really where people will put their stops, or where there's, people will put their stops or orders. A lot of times those areas will get hit, but for what we're talking about, we're only going to look at the higher highs as liquidity and lower lows as liquidity. So just say we going up, we have an order block, price trades into our order block. Once we get here, question is, what area will we target? First target will be the liquidity, which would be our lower low, right? So our lower low and higher highs will be our liquidity points, right? So price is moving up, price moved down, just say we knew price would stop here, right? Or we get our trend line break, then it's where will price go. We're going to target this as our initial one, higher high. Boom. The previous one broken. Could go higher, but initial target will be there. So just say for this example, so price goes up, we get the higher high. Once we went up, where will price come to? Our first level is here. Boom. Say we get a trade, we open a trade up. Once we hit this level, where are we targeting? We're going to target the higher high, the high of this previous candle. Boom. And that's where our target is going to be. Then we switch down. Then we get our order block in. And then we go to that area. Where will we target? If we get in a trade, we're going to try to target this one as our initial target. So that's going to be order blocks and liquidity. That's just going to help you determine where price is going to trade to. But now, since we got two time frames here, let's see how they interact. So let's go back to this. We have our break of this level, right? We have our break of this level, and then we create a higher high. Right, so then it's where will price trade down to make that higher low. So we have our order block, price trades down into our order block. Right, so we see this here. I'm going to actually change this to just supply color, just so we can see it. So now we're going to see on the daily chart how that area looks. Right, so we changed the color to this color. You can see my cursor is on both sides. So we would have been up here, we would have had our order block, we would have marked that on this time frame, and then we see price on the daily go down into it here. Boom. and then we start our move up, right? So even if we was to, so eventually once price get to this point on that weekly, we could have our trend line just as something like this. Once we trade into it, we'll look for our trend line break, boom, we break it, and then up we're looking for a trade. And where's our target? This level on a weekly there, that top, which will be this line here. So we get in here on this time frame, and then we have a target at this area, right? That's how the time frames interact. You can see this leg here, you can see how it looks on the daily. It's so many more candles. Then on this time frame it's just a few candles. So just say, look at this one, we have that down move here, see all kinds of candles. Then we just have these straight, just all down candles on the weekly. But if we go to the daily, we can see up and down candles here. And obviously we have little breaks where we go, let's say down, kind of small up move, down, little up move, down, get an up move, down, little up move, down, another up move, down. Or with this one, we just mainly getting down, right? Unless we really understand the wicks, you can tell some of this stuff is happening if you're really understand what these wicks mean on this time frame and the bodies. But so typically analysis though will start with something like, okay, we get a break of this level on a weekly. Then we have our order block where we'll price trade into or expect to get to trade in this order block. Right? So then on this time frame, we see our move up. Wouldn't want that trend line there, but we will get one. Just say somewhere here we can have one. And we trade into that order block on a higher time frame, then we break it, then we can get into a trade if we wanted to take it down. But then we end up breaking it again and going up, so to another trend line, right? We're still in that order block, we haven't broken the top of it, that level. So we get another trend line break, we can be in this trade again, right? And then we eventually, this we don't necessarily care, but it could be another opportunity for entry too, because we're still in this level and we have not broken the top, right? So all of these are opportunities. So then we get to this area, have it again, probably have a trend line right there, right? Break, boom, because we went past this previous high area that we got in. Then we have another area here where price went down, it broke that area. Got our trend line would be in there, then we get another break. And this was the big move down, right? Where we're getting in, we can get in this daily time frame, right, in a trade, but then we're targeting our weekly levels, which would have been this level here, which would have been a new lower low. So that's how time frames interact. So the higher time frames, those are usually cleaner time frames, so you want to mark those order blocks on those time frames, and then just see how it interact once we get in that level on a daily, get our break, then we can look to target those lower lows on this time frame, or we can do the same thing, targeting this stuff on this daily time frame, lower low or something. But that's how the time frames interact. Now, I think it's time for you to go, do your own analysis on charts. I'm just going to pull up a random chart and see if you can do your own analysis. Mark those order blocks, mark the liquidity, which is lower lows and higher highs, trend lines, see what way, if we're bullish structure or bearish, or if we're in an uptrend or downtrend, right, and see how you would be able to get in. You can get in on, you can buy and make money as well as sell and make money, right? So if you think the market's going down, you could sell and make money betting that the market will go down. You can also buy betting that the market will go up to make money. But like for this specific trading view platform, if you do want to pull up another instrument, you would just type the symbol in. There's ticker symbols, you would actually probably have to know those. Like for Apple, it's AAPL. But let me see, if you type Apple, it will still come up, so you just type a company that you know, like Apple. So I go to Apple. Let me just change this here so we have the same symbols. So this is an Apple chart here. Right, we have our daily and weekly. So this is Apple computer, Apple iPhones. This is their chart. So let's do your analysis on here, right? Obviously, like I said, with stocks, there's gaps, so that's why you have no data there. I probably could take that off, but you can just leave it. You could just do the analysis on a weekly. All right, we have that down move here. It would have been an order block here, then an order block here. This is the actual order block that they actually respected and end up making price go down, right? Target there. Although we could have had to wait for that trend line break if we wanted to, or we could have got in sooner, but trend line break there, then would have been down. Could have trend line here actually, then it went up. Boom, but then eventually we had this down move there, right? When I broke it to the upside, then we have this huge move here, and now we're in a higher high. All right, so now we're bullish. We expect the market to go up, so we're looking for a higher low. So then we trade lower at an order block here. Got an order block in here as well. Seems like that small one is the one I got respected. If you don't think this stuff worked, that's a pretty good example right there. Look at that one right there, to interact with it. And then we created another higher high. But then we went into this level again, and we still respected and created another higher high. So just go in there and do the analysis of the stuff that we talked about. Right, you're gonna do your understanding candlesticks. What does it mean? Wicks, body, open, close. Gonna do trend lines, understand trend lines. It shows direction of the market. Structure, that's the overall market, which is multiple trends together. The different time frames. You want to look at order blocks. You want to look at liquidity. And understand the basics of that, just analyzing any market. Just stick to that. And there's other stuff to be learned, but that is a big one right there. If you can understand how to read any chart, that would be a big step. You also, real quick, I'll just pull up Bitcoin, right? It's a Bitcoin market. Same type of analysis here, but on any instrument. You can do the same type of analysis. Peace out.